Boom! Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about whether or not the dreaded, yet highly anticipated and somewhat expected crypto winter is finally upon us. Alright, so we're just going to get straight down to business, you guys. To kick off the video, we're gonna read through this quick article which briefly touches on the history of crypto winners. Okay, after we read over this, I do want to jump into trading view and we're gonna take a look at Bitcoin on the charts. We're keeping it macro, we're really zooming out here. Okay, we're taking a look at Bitcoin on the weekly candles and going back half a decade, and the reason for that is because when you're talking about the end of the cycle and the potential beginning of the new one when it comes to the overall bull market, which Bitcoin is definitely experiencing, just looking at this chart, you can't say this isn't a bull market. But again, as we always say, corrections are a natural, are a healthy part of every bull market, and they just need to happen. And in my opinion, right off the bat, I will say it does look like Bitcoin is getting ready for the final phases of that correction and quote unquote the crypto winter, which is pretty much just sideways range trading, right? Trading boring, slow, sideways for a very, very long time. Okay, so as you can see in front of us, I do have some price ranges and date ranges set up. The reason for that is so history can hopefully give us some insight. Again, history doesn't always repeat itself, but it does tend to rhyme to some extent. So hopefully history can give us some insight as to what might go down over what hopefully isn't, but also would completely unsurprisingly be a crypto winner over the coming months, maybe even going into the next year or two. Okay, but right off the bat as well, I do want to say that the markets are much more efficient now than they've ever been in history. The markets are a very different place as well, and we will talk about this more as we go over the video, as we talk some of these fundamentals. It very well might not take as long for the next phase of this crypto bull market to occur, because again, the macro environment is a completely different space than it was just a few years ago. So I do want to preface the video by saying that, don't want to be such a downer, but again, you guys, corrections are a healthy part of every bull market. That's the reality of it. And yeah, just do your best to make the best decisions with the data set you have available to you. And that's why we're going to be taking a look at both the technicals and fundamentals today to hopefully give you guys some insight as to how to use this data to your advantage. Okay, so let's get to reading. But before we do, you guys, please give the video a like if you go on to gain value from it. If you appreciate the content, I appreciate a like. I also appreciate it if you subscribe to the channel if for some reason you aren't already. Although we're going into the winter, maybe it's going to get a little chilly. Still going to be here for you guys, still making content, just because it's equally as important, if not more important, to stay educated, to stay in the game during the bad times, because anyone, literally, and their mom, and this past couple of years has been a perfect testament to that, can make money during a bull market. But those who really last long, those who can create generational wealth for themselves through investing in these great assets like Bitcoin and cryptos, are the ones who can stand the punches, who can take the punches, who can just take the cold, right? Hardship builds character, and I'll keep saying that over and over the course of just this boring corrective period. All right, but once again, hardship builds character. Those who can withstand the winter are the ones who can play during the summer, I guess. Okay, so put that analogy aside, let's get to reading. And again, you guys, once again, let me know in the comments down below, do you think we're going into a crypto winter, or do you think the bull market is going to keep on keeping on? Okay, I feel like this is pretty polarizing, but again, you got to be real, you got to be rational. Once again, do the best to make the most reasonable predictions with the data set available. And yeah, whichever side you fall on, all good. Just rationalize yourself down below. I'm very, very interested to see what you guys have to think and how skewed the opinions are here. Okay, so that said, let's get to reading. This is, I also want to say, as if you guys didn't already see, this is an older article. I believe this was January 24th of 2020, but all of the same principles I'm gonna disregard. Not even gonna cover the dates involved here or specifics as far as the time horizon goes, but all of the fundamental principles that are mentioned in this are exactly the same. Because again, when you're talking about these very zoomed out macro cyclicals, the principles pretty much are all that matters. Okay, so the sharp drop in cryptocurrency prices has spurred fears that the notoriously volatile industry is about to go through another prolonged slump. The market cycle has become such a predictable pattern, a steep decline in coin prices followed by a prolonged period of flat trading, that it even has a catchy name: crypto winter. The most recent crypto winter happened around 2018 when Bitcoin rallied to about $20,000 before a roughly 2-year slide that saw it fall to under $5,000. But crypto slumps have always been followed by sharp rallies, which drew more players and corporate investments to the space. And that is something that is very important to remember as well, you guys. In 2017, the market was flooded with retail traders. Okay, it was primarily retail up until just a couple of years ago, actually up until like 2020 in this recent bull market. Okay, so with institutional players, with those again, institutional players, sometimes not by choice, are forced to hold their positions. Okay, they have a lot stronger hands than retail traders, as diamond-handed as many think they are. So that will keep that will likely keep the price from just dropping straight down like it has in the past. But that doesn't mean that even institutional players can't slowly but surely offload positions, which will ultimately drive the price down over time. Okay, but again, the market is much more stable with institutional players involved, and that will create for a less parabolic and a less fall off a cliff environment. Okay, so moving down, what's different now? Is the current slump a buy on the dip opportunity like the pandemic price crash in March 2020 or the May 2021 crash that also wiped out $1 trillion in value? Or is it a prelude to a prolonged period of flat trading like the market saw in 2018 and 2019? It's hard to tell with crypto, which has proven to be a particularly unpredictable market. Quote, "If I could foresee the future, I'd be in Las Vegas," said Rob Siegel, a management lecturer at Stanford Graduate School of Business. But there are key changes that could be causing the heightened volatility, he said. The rise in value of crypto assets was driven mainly by speculation and low interest rates. Quote, "In a world of largely 0% interest rates, capital was chasing returns," he said. Ergo, it flowed to riskier assets like crypto to get those returns. With the Fed signaling a new round of interest rate hikes, capital is flowing back to less risky assets that will yield higher returns than they did previously, Siegel said. So on this note, I actually just stumbled upon this article right before prepping for this video. But this morning, I actually said something very similar to this that I want to read with you guys. And I wrote this in the daily newsletter, of course. Okay, so nice little graphic. The bulls versus the bears. Unfortunately, the bear might be bigger than the bull, unlike this image. But anyway, I do want to read this because it's very relevant, not only to Bitcoin, but to the stock market, to growth stocks, to pretty much every revolutionary asset we cover here on the channel. Okay, so again, same principles apply no matter what sector of the bull market it is. From late 2020 through 2021, the primary reason that it felt like stocks could only go up is because that was the reality of it. The Federal Reserve was printing money out the wazoo and interest rates were at zero, which ultimately devalued the dollar and pumped liquidity into the markets. Cut to now. Interest rates are going to be rising at a rapid pace. The cost of basic goods and services is skyrocketing, and everyone is running out of money. When dollars are in higher demand, stocks and crypto are in lesser demand. Okay, that's basic macroeconomics 101. The higher the value of the dollar, of the Dixie, which we talk about a lot, the more valuable dollars are, the less valuable crypto is. Speculative assets are, especially. When people actually need money for gas and groceries, they aren't concerned about buying their next NFT. Okay, so again, when liquidity was being pumped into the system, when the Fed was just printing money, making it rain right on everyone, helicopter money, everyone was getting those stimmy checks. When you get gifted money, when you're given money, especially printed money, you're less mindful of how you spend that. And that's why everyone was just going speculative. Everyone was just gambling. Turn the stock market, turn the crypto markets into an absolute casino. And now we're seeing the ramifications of that on the way down. I just made that video about the Fed, the one I posted right before this, if you happen to be watching this at a later date, that covers what the Fed is doing, how they're attacking inflation, why it's so expected. But that's what happens when you pump so much damn liquidity into the system, okay? And creates such a manic and speculative environment. So now we're seeing the ramifications of that. I said this above, like, don't fight the Fed. The saying was applicable on the ride up, and it will be equally as applicable on the ride down. So just remember that, you guys. That is the primary catalyst for what will likely cause this winter. It could be argued that a lot of this was already priced in, but the reality is maybe it wasn't. And maybe the average investor, maybe the retail Joe who was given a lot of that helicopter money wasn't informed of this. And again, it's looking like this might be it's looking like this might be a little dead cat bounce at the end of the current bull market. Okay, so again, we'll talk a little bit more about that. But you guys, write one of these bad boys every single trading day during market hours. I put a lot of work into it, and along with one of these in your email inbox every single trading day, once again during market hours. If you want like up-to-date live action updates from your boy, that is going to be the first link down below, which is $15 a month or $40 for every 3 months, completely up to you. Again, you get one of these. This is only the intro. Part 2, go over many charts, go over 4 to 5 charts every single day on names we cover here, names that are very relevant to the waves fam. Okay, so again, put a lot of time into this. I feel like it's more than worth the money. On top of that, of course, obviously, you get my complete portfolio breakdown as well. Every single position in my personal portfolio, which I update along with the newsletter, and then explain why I'm doing what I'm doing via the newsletter after I update the portfolio every morning as well. So again, only $15 a month or $40 for every 3 months. That's completely up to you, but appreciate it if you check it out. I feel like it's more than worth that. It's worth much more than that, but obviously, I'm biased. You decide for yourself. If you don't like it, just unsubscribe. But again, it would mean a lot if you guys checked it out. First link down in the description box below. If not, though, no worries at all. As always, I appreciate you guys watching this video. And also, you guys, I don't know how many videos I'm going to be making over the next few weeks. It's a busy month, but I will be here every single trading day, every morning, because obviously I'm trading as well. Every morning I do write the newsletter, and if I'm not making videos, I actually put even more time into the newsletter. Okay, so little cherry on top right there. First link down below. Let's get back to the video. Sorry about that tangent, but back down to business. Okay, so Bank of America, not too much more here, you guys. Okay, and then we'll jump into the charts. Bank of America urged investors to embrace a long view on crypto, and a note titled "Is another crypto winter here?" Bank analysts wrote that direct exposure in crypto coins or tokens should be attractive only for high risk tolerant and speculative investors. Raise your hand, guys. These risk-tolerant investors now include big institutions. There we go, including major corporations. Chris Klein, co-founder and CEO of Bitcoin IRA, noted that there are now more institutions dabbling in crypto, from major investment firms and hedge funds to companies like Tesla, Block, MicroStrategy, and Coinbase that have billions of dollars in Bitcoin on their balance sheets. Quote, "This sell-off is not the same as others," he told Protocol. "Unlike past rallies that were primarily retail," and we just kind of covered this, "the inclusion of larger institutions can affect price moves differently. This uncharted territory for crypto as we enter a new phase of its life cycle with attraction from big players, hedge funds, and even government signaling that they are open to the asset class. Hodling for warmth." This is the last part, you guys, and we'll dive into the charts. Still, for the crypto faithful, this sell-off is an accepted part of the industry where investors are encouraged to hold on for dear life, that is hodl, and embrace the long view. If you're going to invest in Bitcoin, a short-term time horizon is 4 years. A mid-term time horizon is 10 years. The right time horizon is forever. That's a little cheesy, but Michael Saylor is pretty cheesy, okay? If you like him, that's sick. I mean, it's hard to not like the guy. I think he's kind of a weirdo personally, but he is the Bitcoin. He is the absolute Bitcoin evangelist. He is the Bitcoin bull of all Bitcoin bulls, and I do agree with him to some extent here. That's a little much, but again, the general thesis holds strong. The general principle there. So McCann argued that downturns are, quote, "usually the best time to build and invest because only the true believers can stick through this kind of volatility and focus on building. These times are what separates the wheat from the chaff, the strong from the weak. Volatility builds character, hardship builds character." And again, ultimately, this is what separates the winners from the losers in life, not only in the markets, but in Bitcoin, but in life as well. Bitcoin, the markets, a lot of parallels to life. Life and trading, like anything else, there's a lot of parallels, and yeah, it's hardship builds character, you guys. Those who can withstand the winter will be able to experience the warmth on the other side. Okay, so that's that, you guys. Let me know in the comments down below. Once again, just what do you think? Do you think we're heading back up, or do you think some of these price targets that I'm about to explain are in the cards? Okay, so kicking it off, I will say, this is looking like a classic two-wave theory, the good old Waves Fam Coin two-wave theory, just a little different. The reason for that is because the first wave was so significant, and the second wave was so almost near identical to the first wave that it's not a class, and a lot more elongated. So this is like a tsunami, a two tsunami theory. Okay, so obviously the first wave up, Bitcoin broke past its all-time high of $20,000 in December of 2020, following the halving that occurred in May of 2020. And that's when I started getting excited about Bitcoin personally, because the halving occurred in May of 2020. And obviously, it took some time to set in. But later that year, that winter, we saw the opposite of crypto winter, and crypto absolutely exploded. It went to the sun, okay? Very hot crypto sunmer, okay? So after that first wave bubble popped, a lot of people thought that was the end of the rally because it has been in the past, but boom, bear trap, fake out. We saw that second wave, second tsunami to the upside. But now, you guys, it's very, very rare, especially in this macroeconomic environment with raising rates, with the dollar gaining steam. It's just super unlikely that we see a third wave, just because, again, the two-wave psychology, whether micro or macro, whether it's lasting 2 weeks or 20 months, 2 years, I guess, is the psychology is still the same, right? The parabolics, like the hype, the mania, the manic increase, followed by the originals taking profits, the early money taking profits, and then ultimately those who missed the first round getting in on that second round up. That's the same psychology. And now that the bubble's popped, it's looking like when you go like that, it kind of looks like we looked just back here, right? Big move up, followed by that little sell-off, and then we see some bounces on the way, some relief rallies along the way down. But ultimately, the game is usually over after that second big move up, which we've experienced. And right now, again, given the macro as well, not just talking the charts, but the charts look bad also. Given the current macro, it does seem like downside is a lot more likely than upside, and that is because also following this big bounce, this is what we saw over the past few weeks could be viewed in retrospect as just a dead cat bounce or relief rally. Okay, big move down followed by a short move up, usually followed by another big dump to the downside. And even what's happening now at the time of recording, it's March 7th. We saw a big move to the downside, sideways price action, which is likely going to be followed by another move to the downside short term. We're not going to talk short term today, but by the time you guys are watching this, even if you guys are watching this a little later, that will likely hold true. Regardless, again, big move down, relief rally, probably going to be followed by another move down. And the reason that $20,000 is my absolute downside price target, I mean, I wouldn't be surprised at all if we went to $20,000, but I also wouldn't be surprised if $24,000 to $28,000, which is where I'd personally buy Bitcoin, is where we floor out, because again, institutions like this, is a lot more mass global adoption of Bitcoin at this point. It's way more. It's an established asset at this point, okay? It's highly regarded by many smart individuals, many competent and respected individuals. So 24 to 28K, everyone's expecting 20K because that was obviously 2017's high, and that was the high that's the last place we saw a correction prior to going absolutely parabolic in December of 2020. So that is a very obvious reversion to the mean, a revisit to the initial high, which also kind of aligns with what you see back here in the 2017 bull run. Let me know if you guys were around in 2017. I got in like March of 2017 in Ether, but let me know if you guys were around during this original crypto bull run. Okay, I'm interested to see how many of you guys are OGs. If not, it's all good, but just curious. Anyway, from the top over here at 20,000 to when the bubble popped, and again, there was a lot more retail, so it's probably not going to happen this fast. It's not happening this fast, okay? It's a more stable environment. But from the top to the bottom, prior to seeing a pretty significant bounce over the span of a few months, Bitcoin saw a 71.23% retracement from top to bottom prior to the first bounce. Now, this almost comes perfectly in line, right? 71.23, 71.20 from Bitcoin's all-time high in November of 2021 at just under $69,000 to the reversion to the mean, to the true mean, which is that initial high, which is $20,000, or Bitcoin's previous high once again. So that wouldn't surprise me. Once again, it also wouldn't surprise me. And my money personally is on the fact that we will not go lower than $24,000 unless governments across the world decide to ban Bitcoin. But at this point, if it was going to happen, it would have happened. Bitcoin is too large. Bitcoin is too powerful. Bitcoin is bigger than any one nation state. So that's the beauty of Bitcoin. If that was going to happen, it would have happened. That's very, very unlikely to happen. But again, just from all things considered, unless there's an absolute asteroid that hits Bitcoin and cryptocurrencies, I don't think it's likely that Bitcoin goes below $24,000, and I'm personally a massive buyer of Bitcoin at $28,000. Okay, so I will say that, but let's talk about how long from that first bounce, from that 70% correction, 70 whatever it is, reversion to the mean correction, we'll call it, to the next iteration of the bull market, to that next spark occurs. Okay, so a lot of investors obviously think that the Bitcoin halving similar to the World Cup or the Olympics, is going to be the catalyst, which happens every 4 years. Got to preface it with that. Forgot that. So every 4 years, the Bitcoin sees the halving, right? May of 2020 was the last halving. That is ultimately what catalyzed this recent bull run. So 4 years. May of 2024 is going to be the next halving, okay? And that is where the supply of Bitcoin that is given to the miners is cut in half once again, okay? So supply and demand economics 101. The less supply that is being introduced to the system, the more rare that existing demand becomes. That's obvious, but that is likely what what like a lot of like Vitalik and like the CEO of Huobi was saying in a bunch of interviews. That's likely, and just I mean, it's pretty obvious that if there's not a catalyst by then, that will be the catalyst. So again, markets are more efficient. It's very likely that it happens faster than that, but just keep that in mind. So anyway, if we look back historically, 2017, again, from the top to the bottom of that 70% correction bounce, and we went sideways for a really long time and then saw another dump actually, followed by some very, very dull price action in late 2018 through 2019. That was a hard time to be involved with crypto, you guys. That was brutal. I remember that very well. Remember the despair. But that is true despair. Anyway, from that bounce, from the 70% correction to the reignition, to that spark that once again ignited a little bull run all the way up from $4,000 in April of 2019 to a high of $14,000 in July of 2019. That was 406 days. Okay. So just over a year and a quarter that lasted, all right? I mean, under a year and a quarter, I guess. But over a year, it took over a year from that full correction, the reversion to the mean, to the spark that catalyzed the next phase of that bull run. So if we do say, okay, so we're probably not going to go straight down. I will say that just going like that, even in a pretty significant sell-off, feels more organic. So say it takes a while. Say this correction lasts until June, okay? The next couple of months are rough. Interest rates just rose. It takes Bitcoin a couple of months, okay? So maybe going to June, midsummer. Just, again, completely speculative. But for just for the sake of it, say June is when Bitcoin sees $24,000 to $28,000. From that point to 406 days, just copy paste. Again, you guys, history doesn't repeat itself. This is very unlikely to happen to a T, obviously, but it does rhyme. So just entertain it. And again, you guys, pretty much this is really all you have when it comes to data sets available. So anyway, from June 20th, again, completely speculative, to if you expand 406 days, that would take us to July to August of 2023, okay? Before we see that next leg up, okay? And again, you guys, the markets are more efficient. I do personally believe that Bitcoin will see its next leg to the upside, next run up prior to the next halving. But hey, maybe it takes till the next halving, and that's perfectly fine. But again, the markets are a lot more efficient. Bitcoin is scaling out faster than ever. The Lightning Network, it's being adopted by governments, by institutions. It's a legitimate asset class at this point, and also it's the best inflation hedge in the entire world. Okay, so let me know what you guys think. Again, this is just a little brain exercise, mental exercise. None of this is guaranteed. Nothing is ever guaranteed, especially in these freaking markets. So just stay on your toes, you guys. Keep learning, keep educating yourselves, and again, the crypto winners, just crashes in general, and growth sectors as well. This is when long-term wealth is created. Once again, wheat from the chaff, winners from losers. So just keep a cool head, stay rational in a hot-headed and irrational environment, and that will pay off over the long run. Literally. Okay, so we'll call it there, you guys. I'll see you downstairs in the comments. Until next time, always remember, take action, make waves. Peace.